Yes, it's 10 a.m., 10:01 a.m. in Paris. Good morning, good afternoon, good evening, everyone. Welcome to this webinar. Today, we're going to discuss the recent report by the Asian Development Bank called Advancing Digital Services Trade in Asia and the Pacific. This is the Think chapter in the 2022 edition of the Asian Economic Integration Report, which is one of the ADB's flagship publications. I will start by introducing myself. My name is Antonella Liberatore. I'm the head of the Trade and Business Statistics section in the OECD Statistics and Data Directorate. It was my pleasure and honor to contribute with a very small part of this report, notably on measurement of digital trade, and I will moderate this discussion today. I think you should have seen the agenda of the seminar. We will start with some opening remarks. Then the main authors of the report will present the key findings of this study. And finally, we will have a panel discussion, and hopefully also we will have some time for a few questions from the floor at the end. So let me introduce Annabelle Murugan, who will formally open this webinar. Annabelle is an experienced economist who held a number of senior positions across different directorates in the OECD. Annabelle has published extensively on trade, labor markets, and fiscal policy. And currently, she's the head of the Trade and Productivity Statistics Division in the OECD and Statistics and Data Directorate. So Annabelle, please, the floor is yours.
I forgot to unmute. Thank you very much, Antonella, and good morning, good afternoon, good evening, everybody. I would like to welcome you warmly to the presentation of the 2022 Asian Economic Integration Report. The report was written by a renowned expert from the ADB, but also from across the globe, and the OECD is really happy to have contributed to this impressive piece of work. And I would like to thank the ADB team for this fruitful collaboration. This report, you will see, is very topical. It touches upon a lot of issues that are very high on the policy agenda in Asia and the Pacific, but also elsewhere. The path and the strengths of the recovery and the role international trade and cross-border investment play in supporting this recovery, together with supply chain bottlenecks and their impact on the global economic outlook, are all topics policymakers are extremely interested in at the moment. In addition, the COVID crisis and the restrictions that were put in place to limit the spread of the virus have also underlined the importance of cross-border mobility of people and of face-to-face interactions in doing business abroad. It is impossible to give justice to all these topics in 5 minutes, so let me rather focus on this year's theme chapter on advancing digital service trade in Asia and the Pacific. As you all know, there has been a rapid increase in the pace of digitalization and a surge in digital trade during the crisis. This has softened the downturn, but it has also raised some issues on the economic, the social, and the political front. In particular, we need to answer questions such as, how can we monitor progress in digital services? Which policies are needed to foster trade in digital services, to capitalize on the progress made during the pandemic, but also to make sure that the benefits of this trade are shared equally? Those are open questions the international community is still working on. At the OECD, for instance, we've been working together with the IMF, the WTO, and UNCTAD on a handbook on measuring digital trade to respond to this growing demand for comparable data in this field. The first edition was published in 2019, and we're planning to release a revised version by the end of the year. This ADB report is a tremendous effort to advance the debate on digital service trade with a regional focus on Asia and the Pacific. The presentation today is going to give you a flavor of the wealth of information it contains, including a description of most recent developments, but also some modeling work assessing the impact of digital service trade on several dimensions of welfare, together with an extensive review of policies that needs to be put in place to boost trade in digital services. I'm really looking forward to listening to this presentation and to the discussion that will follow. And I thank you very much for your attention. Back to you, Antonella.
Thank you very much, Annabelle. So let me now introduce Xin Yang Park, who will also give her opening remarks. Xin Yang is the director of the Regional Cooperation and Integration Division in the Economic Research and Regional Cooperation Department of the Asian Development Bank. Xin Yang is in charge of examining the economic and policy issues related to regional cooperation and integration. So please, Xin Yang, the floor is yours.
Thank you, Antonella, and also thanks to Annabelle and the OECD colleagues who joined this webinar today. Well, this event has been very important. Asia has experienced rapid structural transformation over the past half a century. If the past structural changes have been driven by the manufacturing, trade, and industry, the next century will be driven by services. The opening of the services sector combined with digitalization have brought down barriers to services trade and offer many new opportunities for international wage arbitrage and cross-border flows of services. Digitalization has fostered easier, faster, and cheaper transaction of services for both suppliers and consumers. This phenomenon, now known as the third unbundling, has major implications for many economies and labor markets around the world. Today, services contribute to nearly 60% of Asia's economic activity, and it employs almost half of the region's labor force. Despite the rapid growth, services still represent a relatively small fraction of total trade in Asia Pacific. This is, to some extent, the result of high barriers to trade in services. According to the OECD's Services Trade Restrictive Index, Asian economies face much higher restrictions than average OECD economy. These barriers typically reduce competition and delay innovation. The costs are borne by consumers and businesses, affecting the country's competitiveness and capacity for digital transformation. Digitalization has been one of the pandemic's few silver linings. The pandemic has accelerated the transition to digital modes of transactions, requiring firms to operate in structurally very different ways. As the delivery of services can be increasingly made online, it also spurred growth in services trade around the world, including Asia. From a risk management and cost efficiency perspective, this trend will likely continue, expanding the scope for Mode 1 services trade after the pandemic. While offering new opportunities, tapping its full potential still face a lot of challenges. It requires Asia Pacific region to make necessary investment and undertake policy reforms. Among other constraints, the lack of access to the ICT infrastructure and deep digital divide must be addressed to ensure the integration of these sectors into global trade. ADB's latest flagship publication, Asian Economic Integration Report in 2022, which was released in last February, examined these issues. We are very pleased to discuss the main findings with a distinguished group of experts in this area today. I would particularly like to thank the OECD Statistics and Data Directorate for their invaluable support in the preparation of the report. hopefully today's seminar will lay the ground for constructive discussions on digital services and digital services trade. And we look forward to taking our collaboration further. Thank you, everyone. I look forward to a fruitful discussion today. Thank you.
Thank you very much, Xin Yang. So we will now move to the central part of this seminar. We have with us two of the main authors of the report, Pramila Crivelli and Rolando Avendano. They're both economists in the Regional Cooperation and Integration Division at the ADB. Pramila is an expert in applied econometrics and international trade policy, while Rolando is specialized in financial and international economics. I believe we have not only a presentation, but also a video. So we're looking forward to it. Rolando, the floor is yours.
Thank you very much, Antonella, and thank you to our colleagues in OECD for the opportunity to share the main findings of our theme chapter on the Asian Economic Integration Report. So if it's okay, we will start with a short video presenting the main messages of the theme chapter.
Rapid digitalization during the COVID-19 pandemic is expanding opportunities for digital services trade. Cross-border services are increasingly delivered online instead of physically. These include financial, legal, information and telecommunications, health, education, and other business services. Digital services trade can contribute to economic welfare and development. There are many potential synergies between digital services trade and other sectors. Growth in digital services trade in Asia and the Pacific is among the highest in the world. However, digital services trade as a share of total services trade in Asia still has room to grow. Closing the gap requires improving competitiveness in digital services. The region needs to invest more in human capital and ICT infrastructure. Policy and regulatory reforms are the key to higher competitiveness. International cooperation can reduce barriers to digital services trade, promote system interoperability, and ensure fair taxation. Challenges must also be overcome to realize the full potential of digital services trade. Economic and social inequality between those with and without digital skills may worsen. Growing digital services trade calls for renewed attention to cybersecurity and privacy. What does it take to ensure that digital services trade contributes to inclusive growth in Asia and the Pacific? To find out, read the latest Asian Economic Integration Report.
So to provide some background and motivation on the preparation of this theme chapter, as it was mentioned in the introduction, while the role of trading services has been widely discussed, the transformation of services trade as a result of digitalization remains less explored. Many services, long considered non-tradable, were slower to globalize and to unbundle into global value chains. And digital technologies are changing and steering a new phase for services. Digitalization during COVID-19 has also accelerated this phenomenon, and this might not be fully reversed even after COVID, and represents a structural shift on the region. As shown in these charts, both Asia and the Pacific experienced steady growth on trading services until the arrival of the pandemic. Services requiring physical presence, such as travel and transport, were severely affected by cross-border controls and restrictions. And in contrast, services that could be digitally delivered, such as other business services, were more resilient. So this is part of the motivation for our study. Next slide, please. One central question in this discussion was whether digital services can be a vector for economic development. This figure on the left shows the share of digital services exports as a share of total goods and services. And we observe first that most economies in the OECD tend to have higher export shares in digital services. Developing Asia economies show in general low shares in digital services exports. We will argue in the presentation that Asian economies have still a lot of room for improvement and potential to expand in these sectors. And we also observe that economic size is not necessarily a precondition for digital services exports or competitiveness in these sectors. So to respond to the question if digital services exports can lead to economic growth, we conducted some analysis, and this analysis suggests that indeed digital services trade may be associated with a rise in output and gross national income, for example. A different question, and perhaps we can discuss today, is on the role of digital services on productivity. Next slide, please. With the support of OECD colleagues, we built on their framework for measuring digital trade to define the scope of our analysis. Official statistics do not allow the identification of digitally ordered or digitally delivered trading services, and reliable estimates for the region or globally are not available. For this reason, I'm building on the OECD, WTO, IMF framework and UNCTAD's previous work around the concept of ICT-enabled services. We consider the scope of services that can be, in principle, digitally delivered. We identify those services that are digitally delivered and use them as a proxy for digitally delivered services trade. The table on the left outlines the service categories that were considered to be digitally deliverable. Next slide, please. Some examples of digitally deliverable services are here described. So I won't go in detail, but they basically include both services that are now delivered digitally and also services that are based on ICT technologies. They go from insurance and financial services to services for intellectual property, of course, telecommunications, information and computer services, certain business services, and personal, cultural, and recreational services. So these are categories in which different Asian economies are specialized. Next slide, please. So what we see as a whole is that trade in services has experienced a significant growth in the past 15 years, as we see on the left chart. And as we saw, and as we see in the middle chart, for digital services in particular, the OECD's trade volume has increased also significantly from 1.8 to $4.5 trillion in the last 15 years. Asia's trade volume over the same period tripled from 400 billion to 1.3 trillion in 2020. So we see a large expansion. And also in terms of the global shares of digital services trade, we see that OECD economies remain dominant with nearly 80% of the total, while Asia Pacific's share has increased from 17 to 24% over the past 15 years. We also see, importantly, that digital services trade in Asia showed resilience during the pandemic, and there was even a 1% increase in 2020 against a 38% contraction in non-digital services. And we see similar figures for OECD economies that contracted on digital services by 3% and 39% on non-digital. Next slide, please. A glance at the top exporters of digital services worldwide confirms the driving role of OECD economies, including US, UK, Ireland, where the large share of digital computer services is an important part of their exports, Germany and France. The trends in Asia also underscored the role of a small group of economies as an engine for digital services. In particular, India, PRC, China, Singapore, Japan, and Korea are the most dynamic economies. However, we also see that some developing Asian economies are experiencing a substantial growth in digital services exports, and some of them with an annual growth about 10% include, for example, Bangladesh, Cambodia, Laos, Nepal, and the Philippines. So we see two different groups of countries, one with a very established digital services sector and another one which is growing rapidly as well. Next slide, please. Okay, so let me now give the floor to Pramila to continue with the presentation. Thank you.
Thank you very much, Rolando, and thank you for having us today. I thank you for the OECD colleague to participate to this webinar. So, as explained by Rolando, many economies in Asia and the Pacific are still at the nascent stage of the developing competitive digital services exporting sector. And it was also mentioned in the video that those countries need to close the gap with advanced economies. And to do so, they need to focus on the main drivers of the digital services trade, which are, among others, human capital development, digital connectivity, and ICT investment. And we will see in the next slide also the enabling policy and regulatory environment. Sorry, can you get back to the previous slide? Yeah. So in this slide, as you can see on screen, we have identified some positive correlation between these factors and digital services trade. In particular, the length of education is associated with a greater trade in digital services, which means that the importance of upskilling and reskilling the workforce cannot be overstated. And developing Asia's digital services exports hinge largely, as you know, on the availability, accessibility, and affordability of high-quality broadband services. And on this front, the region's rapid growth of mobile penetration bodes well. Next slide, please. So I was saying the fourth driver is policy, enabling policy and regulatory environment. So the region needs to embrace further efforts for domestic deregulation, trade liberalization, and international cooperation. And in fact, for the 17 Asian economies with available OECD Digital Services Trade Restrictiveness Index, the DSTRI, which you are quite familiar with, I'm sure, you can see that the total number of restrictions increased from 138 in 2015 to 153 in 2020, with barriers related to cross-border data flows accounting on average around 20% over the period. So next slide, please. So to look at these questions and what would be the impact of the regulation or liberalization, we conducted an exercise, a computational general equilibrium model using ADB multi-regional input-output data, and we've simulated the impact of two scenarios. A trade liberalization scenario, which is scenario 1, and a domestic deregulation scenario, which is number 2. Under each scenario, the model measures the spillover impact on trade and income across sectors when 10% of the transaction costs are reduced for the digital services sector. Okay, and for trade liberalization, we talk only reduced cost only for international trade costs, but we do not touch international trade costs. So this is the difference between the two scenarios. Next slide, please. The exercise points to sizable economic gains, and we see that trade liberalization and deregulation scenarios generate significant increase in both backward and forward GVC linkages of the digital services sectors. And those sectors that are liberalized or deregulated can be seen on screen within the red dashed line. But at the same time, the scenario also leads to stronger GVC linkages of other manufacturing and services sectors through spillover impact. So as you can see on screen, all sectors are in fact impacted, not only DDS. Next slide, please. So digital services trade is heavily reliant on the transmission of data across economies. So we're using a difference in difference approach, comparing the digital services and the non-digital services sectors. We've estimated the impact of 3 types of data flow restrictions on Asia's trade versus other regions. The categories we have is first data localizations, which means that data processing is required entirely in the host economy without repatriation allowed. We have local storage requirements, which means that at least a copy of the processed data should be stored locally. And finally, we have the conditional flow regimes, which means that data can be transferred under certain conditions, like, for example, customer consents. The results shows that these data-related restrictions raise costs for companies to conduct businesses across borders, and it leads to lower levels of digital services imports, as you can see with the negative coefficients in the table. And this is the case worldwide, but this impact is even stronger in Asia, keeping in mind that Asian economies are the main users of data localization restrictions measures, with 70% of the measures imposed worldwide being in Asia. Next slide, please. The results show the importance of regulations of the digital services trade that can take place at different levels. It can take place at the multilateral level, regional level, or domestically. And at the multilateral level, the main obligations of the regulation of digital trade under the existing WTO framework can be found in the telecom annex of the GATT, the General Agreements on Trading Services. But some key considerations remain. The first one is the classification of the product. Sometimes it's difficult to know if it's a service or if it's a trading goods, like just think of buying a movie on Netflix. And this has important implications on the application of either border measures or domestic regulation. So this is a key issue. And the second is the degree of liberalizations. While some commitments are made under the WTO framework, the degree of the liberalization varies significantly between, non to unbound commitments. And finally, even when you have commitments, then you may also have exceptions that allow deviations from the trade obligations for legitimate policy reasons. So these are all elements to keep in mind, and knowing that some of those elements can also are starting to be addressed through plurilateral negotiations ongoing at the WTO. Now, at the regional level, in regional trade agreements, there are three main sovereign approaches in dealing with digital services regulations, and these approaches are adopted by the US, the PRC, and EU. These approaches are in fact balancing in different ways the interests of the main stakeholders that are the consumers, the private sectors, and governments. And they can serve as, and in fact, they have already served as a reference for negotiations of new agreements. And in fact, independently of the approach adopted, what we have observed and what we also show in the report is that the number of digital provisions in trade agreements have been increasing over the last decades, with trade facilitation measures being the most common provisions, while the enabling business provisions are on the rise, but still a bit lagging behind compared to other categories. Next slide, please. Well, yeah, next one, because I'm going to skip that one. Okay, so at the national level, services domestic regulations include a wide range of important areas such as transparency, the regulation, qualification requirements and procedures, technical standards, and licensing requirements, and so on and so forth. It needs to be acknowledged that digital economy raises additional difficulties. So you have various potential and opportunities, but we also need to think of how to ensure transaction safety, prevent cybercrime, ensure the confidentiality, and these are issues that need to be addressed by cybersecurity regulations. It might be quite challenging for different reasons, especially because it's not always easy to distinguish between legitimate policy objectives from protectionism, or in some cases, it's simply because of some lack of adequate capacities or regulatory framework or limited human and financial capacities, especially, and this is especially true for developing economies and least developed countries. And I think most importantly, why economies adopt domestic services and cyber security regulation individually, raising regulatory heterogeneity is adding complexity to the digital environment, because we need these elements to be regulated at the domestic level, but it should not be done in a too heterogeneous way, because this adds complexity. So in fact, the cross-border nature of digital services trade, given the cross-border nature, we need international cooperation, and it's quite critical. It can take the form of mutual recognition agreements, be formalized at the WTO in prilateral negotiations, as I mentioned earlier, or translated to informal arrangements. Next slide, please. Okay, I missed publishing that. Anyway, so the policy recommendation is that economies need investment not only in ICT infrastructure and connectivity, but also in human capital to strengthen their digital capacity. We need to reduce internal and external cost of trade in digital services through the regulations of services sectors and also trade liberalization that could strengthen GVC participation and translate into significant real income gains. And not only direct, but also directly, but through spillover effects. Economies need to assess and balance their interests between safeguarding cybersecurity, data protection and privacy on one hand, and supporting fair data flows on the other hand. Finally, we have economy level regulatory reforms that are needed, and they should be complemented by international cooperation, as I mentioned earlier, to avoid regulatory heterogeneity. And in particular, the plurilateral initiatives, the regional trade agreements, also the digital economy agreements, international tax cooperation and mutual recognition arrangement can be instrumental in achieving this transparent, fair, and harmonized regulation taxation framework that we want. And most importantly, in this process, governments should take into account the possible differential impacts and trade-offs between different stakeholders and different actors in the economies. For example, the skilled versus unskilled workers, or in urban and rural areas, to foster competitiveness of digital services across the society as a whole, while addressing the digital divide and the distributional impact. Thank you very much.
Thank you very much, Pramila and Rolando. This was really brilliant. I also want to flag to the audience that there are many more interesting findings in the report, so I would encourage everyone to take a look if you haven't done so yet. Also want to mention that before we move to the panel discussion, the audience may want to write any comments or questions in the chat box. So in the meantime, I will try to summarize them for the speakers. So we move them now to the panel discussion. We have two panelists today. So our first panelist is János Ferenc. He is a trade policy analyst in the OECD Trade and Agriculture Directorate. János is an expert in services trade, and he is the person in charge of the Services Trade Restrictiveness Index, the STRI. And also more recently, he's developed the digital STRI to identify specific barriers to digital trade. And then we have also with us today, Zhongwu Kang. Zhongwu is a principal economist in the Regional Cooperation and Integration Division of the ADB. He held a number of senior positions in the ADB and is now leading the annual publication of the Asian Economic Integration Report. So, welcome to both of you. If you don't mind, I will start with János. So, János, for a number of years, the OECD has been tracking and quantifying barriers that affect trade in digitally enabled services or digitally delivered services or digital services for simplicity across many countries. So based on the latest digital STRI, what are in your view the main barriers for economies in the Asia Pacific region? And also, do you observe any systematic differences between the Asia Pacific and the rest of the OECD.
Thank you, Antonella, and good morning, good afternoon, good evening, everyone. It's a great pleasure to be at this webinar today. And before answering your question, let me start by congratulating the ADB for the latest edition of the Asia Economic Integration Report, which covers a very timely theme chapter on advancing digital services trade. And as just we heard from Rolando and Camila, it's a very rich chapter. So it was really great to read through it. The amount of analysis and the amount of data there is quite striking. So it's very a great source for understanding where the region stands at the moment. So my thoughts on your question come a bit as complementary to what the report adds in terms of where does the region stand in terms of barriers to digitally enabled services, what are the main drivers that we see, some recent trends, and how do countries compare among themselves and also to the OECD. So I would like to start by saying that over the course of the past years, we have seen that the volume of regulations and laws that affect digital trade has been growing quite quickly. And that's not only something that is characteristic of the Asia-Pacific region, rather it's something that happens globally. But with that volume of new regulations, we also see an increase in the volume of barriers. And how do we define barriers? What is a barrier to digital trade? Largely, any kind of measure that provides a discriminatory treatment towards a foreign services provider or impose condition on foreign firms that are more cumbersome than necessary. So essentially, any type of regulation that fit into those lines would be a trade barrier. And the OECD has a long-standing work in identifying and measuring barriers to services trade. And as you mentioned, Antonella, in 2019, we developed a specific tool to measure particularly barriers to services trade through the digital STRI. And if you look at the environment in the Asia Pacific, I think one of the main drivers or the main cross-cutting challenges that we see is related to impediments that affect communication infrastructure, movement of information across borders, and particularly cumbersome policies on online payments and electronic transactions. But I would like to focus particularly on barriers that affect communication infrastructure and movement of information. So the first one relates particularly to regulations and barriers on telecommunications, for instance, which is really the pillar of the digital economy and any digital transaction. And it's also a very technical sector. So regulators really need to monitor closely how the market functions and what are the competitive forces on the market in order to be able to create also a trade conducive environment in this sector. So it's a very difficult job also for the regulators. The other point where we see, or another area where we see particularly cumbersome regulations in the region is on cross-border data flows and data localization. And just to give you a sense on the magnitude, about 20% of all the restrictions in the region are related to cross-border data flows or data localization. So it's a quite significant part of the whole picture. Importantly, also, if we look at the trends over time, the number of new barriers have been increasing in the region over the past few years. And this also includes particularly measures related to data localization, which again reinforces the previous point. The second point that I want to highlight is on regulatory fragmentation. So while we know that the internet is inherently borderless, regulations remain fragmented by borders. This means that if I want to start an online business today, and if I want to sell online services to other countries, I need to make sure that I comply with the regulations of all the countries where I want to sell my services to. But as we know, regulations are different across different countries, so that means every attempt to comply with those regulations, the compliance cost, the trade cost will increase. So there is an incentive for governments to impose interoperability instruments, such as standards or mutual recognition agreements that go a long way to easing compliance costs for firms. In the digital STRI, we see that there's still some room for improvement in the region when it comes to bridging these regulatory differences. It's one of the highest in the region that we compare. For instance, if you look at the OECD countries, we see a much closer commonality when it comes to standards, when it comes to different regulations. Whereas in Asia, we still see quite a significant gap. The third point that I think is also something important to highlight here is also about digital divide, something that also Director Park mentioned in their introductory remarks. So trade regulations play a key role in incentivizing foreign investment for better infrastructure and better services, but it also creates balanced regulations to minimize unnecessary trade barriers and foster measures to ease trade. So one point that we discovered when we were looking at trade regulations in the Asia Pacific region, particularly for these developed countries, is that many of these countries do not necessarily have the necessary regulatory environment in place to incentivize this kind of investment and to create the regulatory environment that would be needed to provide a strong digital economy. In many cases, there were not even the necessary institutional framework in place that would be capable to adopt these regulations. So I think there's an opportunity here to also help those smaller economies, those LDCs, to develop these regulatory environment and to also draw on international best practice in order to develop these incentives to help them to bridge those digital divides and to bring them closer and to allow them to be more connected globally. So I hope that answers your question, and I'm happy to elaborate further if needed.
It does answer the question, although I know that we could discuss this for a much longer time. But maybe we move to another small question for you. So we have seen, and also Pramila mentioned, that new types of agreements have been emerging, and there are specific agreements designed to facilitate digital trade. So those are the digital economy partnership agreements or the digital economy agreements. So do you think that these new types of agreements could be used to address some of the challenges that you were mentioning before? And thinking, for instance, in particular, this fragmentation of regulation that you were talking about. So do you think they could be helpful? Do you think they could help better seize basically the opportunities linked to digital trade services?
Thank you, Antonella. I think that's a very good question. It goes very much to the heart of the question on regulatory heterogeneity and regulatory fragmentation. I think these new type of agreements, they have the potential to reduce those kind of differences in regulation. But at the same time, we also have to be cautious because they could also create just clusters of different kind of regulations across different like-minded countries. So I think it is important to also have maybe a multilateral dimension in mind towards which these kind of agreements could work towards to. And of course, I'm thinking here about the WTO's Joint Statement Initiative, which is a multilateral mechanism aimed at developing rules for everybody on digital trade. But that said, I think the digital economy agreements, which, by the way, I must also mention that I think those, we should talk about them in a separate way than, for instance, an e-commerce chapter in a free trade agreement, because these digital economy agreements, they are relatively new. So I think the most recent one or the recent ones that emerged as a digital-only agreement started in 2020 with the agreement signed by Chile, New Zealand, and Singapore. And from that point on, we see more and more of these digital-only type of agreements. So I think there's those are a little bit different than just the e-commerce chapters in FTAs. But that said, I think there's a great potential in these agreements because they allow a bit the flexibility to cover new type of disciplines, new type of issues. For instance, some of these new type of agreements cover artificial intelligence. And clearly that's an area where where new issues are coming up, and where we see a relatively important input and relatively important role for trade in driving the uptake and use of artificial intelligence in the future. So clearly that's something where these type of agreements have a particular benefit because they allow the flexibility to be covered and to be tested. But at the same time, I think it is important that these agreements will work towards a multilateral outcome at the end.
Thank you, Janos. Yes, the multilateral point is one very dear to our heart, I assume. So we will move to Jongwoo. For you, Jongwoo, I mean, we've seen in the report, and also Xinjiang mentioned this. So the share of digital services on the total services that are traded, exported or imported in Asia is lower than the average of the OECD. So what would be, in your opinion, the priority areas for Asian governments to foster trade in digital services, and especially exports of digital services?
Thanks, Antonella. So when it comes to the export performance of the digital services by Asia and the Pacific region, you're right in saying that the relative share of the Asia is lower than that of the Europe and North America, although the growth rate of the Asia Pacific is quite faster than perhaps any other regions in the world. When it comes to the export capacity, we tend to think about the overall the production capacity, because at the end of the day, export is kind of driven by the production capacity of the specific country on the productivity and the factor endowment. Those kind of traditional components and the factors will have to be considered in the context of how to nurture the support the competitiveness of the exporting capacity of the specific country. So we can think about the factor endowment theory, for example, the human capital, the physical capital, and also the policy and regulatory environment, plus quite strong caveat of the digital connectivity to be considered in the context of the digital service trade. First, the human capital, the overall years of schooling, as Pramila's slide has shown, shows a quite a positive correlation with regard to the digital services export across the countries. This bean scatter plot, as you may know, different from the typical scatter plot, is based on the so-called the two-stage ordinary squared analysis. So it already controls all other covariates. So after controlling for all other potential factors, how the relationship between the digital service export and the specific factor shows up. That's the basis of the bean scatter plot. So not only the average years of schooling, but more important is the digital competency or the digital literacy, which needs to be embedded into the education curriculum of the primary, secondary, and tertiary school in the region. That's the one factor. The second factor is the digital connectivity again, the internet penetration ratio, as well as the internet speed and or bandwidth capacity are quite a crucial factor to affect the availability of both the producers and the consumers having access to the digital services and digital services trade. When the Pramila showed the chart, as we can see, the slope between the internet bandwidth capacity and the digital service export shows the even steeper line than that for between the digital service export and then the mobile broadband subscription. What does this mean? This means that instead of the simple access to the internet service, the capacity or the quality of internet is more important factor to drive the digital service exports across the countries. That's one crucial finding from our analysis. The third one is the general ICT investment. In that sense, I also like to echo what was mentioned by Janos about the importance of the e-payment system, because even though you have some online access, internet access, if there is no available online payment, digital payment services available, it's quite difficult for the people to engage in the transactions for the digital services. And lastly, the policy and regulatory environment, again, is quite important factor to affect the general enabling environment for the digital services export capacity of countries. Specifically, we have looked at the impact of the freedom of internet access, based, charging from the Cato Institute, the freedom of internet access indicator. It also shows that there is a quite a positive correlation or even causality between the internet freedom access of freedom of internet access and the digital service export performance across the countries. So let me stop there. Thank you.
Thank you very much, John Woo. I see that there are a couple of questions in the chat box. So before going to those, one last for you, John Woo. So Pramila presented the impact of trade liberalization and deregulation of digital services trade on the overall economy. So what concrete policy implications can we draw from that, and how can these two instruments be used in the long term?
Yeah, again, based on the computational general equilibrium model using our ADBs, the multi-regional input output data table, we have tested how much positive impact of the trade liberalization as well as the regulation can bring about to the countries in the region in terms of the real income effect and the trade performance, and then both backward and forward, the GBC linkages. And as we have already shown, there could be quite sizable positive impact coming from the digital service trade, both from the angle of the trade liberalization as well as deregulation. And that kind of positive impact is not confined to the digital service sector only. It can have a quite significant spillover impact over other sectors across the sectors, including non-digital services sectors, as well as the manufacturing and even primary sectors. That's quite the important finding that we would like to share with you. And then when it comes to what could be a concrete measures to pursue trade liberalization and the regulation in this regard, first, when it comes to trade liberalization, first and foremost, we need to pursue more. I mean, one of the strictest constraint that many of the companies and countries are facing is the market access restriction. And then many of the countries in the region and in the other parts of the world are still adopting positive lists instead of negative lists when it comes to the opening the market access to the other countries along the spectrum of the service sectors. And the digital service sector is also quite the integral part of that kind of positive list in many cases. So that's one area that we need to pay more attention to. And then as Janos has already alluded to, the DSTRI itself can give us quite the clear clue on where countries can pay more attention to in pursuing the liberalization of their trade scheme in nurturing the enabling environment for digital service trade. For example, some countries may not allow online tax registration and the declaration regime available to the non-resident foreign vendors. Also, some countries may still retain the local performance requirement for the foreign vendors. And then there could be the commercial physical presence requirement to provide some digital services to be provided by the foreign vendors. So those kind of the restrictions are to be target of the policy reforms across the region. And then when it comes to the regulation, again, one of the key constraints which can cause harm to the digital service trade for both producers and consumers are access to the internet, because some of the countries in the region are even adopting all the internet, the flow should go through the national gateways, and then from the internet security perspective as well as the surveillance perspective. So although those kind of measures could be legitimate from the perspective of the privacy and the cybersecurity, but there should be quite a fine balance between these kind of policy objectives and another objective to nurture the enabling environment for the digital services transactions. Because otherwise, too much restrictive the internet surveillance regime could stifle the growth and the development of digital services trade, not only in the domestic market but across the borders. So lastly, when it comes to the how to make those the commitment and the reform measures more concrete and then the more enforceable in a sense, again, using the points made by the Janos, some kind of multilateral agreement could be one important venue where those kind of unilateral commitment could be inscribed into quite concrete text. As they also emphasized, for example, joint statement initiative on e-commerce, as well as that on the services domestic regulation could be a quite important avenues where many countries in the region and in other parts of the world are encouraged to join. And also, he also mentioned that the mutual recognition arrangement could be another important vehicle through which different countries and different modality can be harmonized through kind of mutual recognition mechanism in some sense. Okay, let me stop there. Thank you.
Thank you very much, John Woo. I feel that we could discuss for much longer. We do have a couple of questions from the audience. I think that we can try to give some short replies. So the first question is from the OECD, from the experience of OECD countries, what can be said about the effect of digitalization on productivity? Is this relationship changing over time, and how does digital services trade contribute to this process? And then we have another one about the global minimum tax rate. So how will this global minimum tax rate affect attractiveness of some countries, for instance, Ireland, in terms of FDI related to digital services, and how should economies position themselves in this light? And maybe we can try to give a short answer to these two before moving to the next one if we have time. I don't know if anyone wants to come in on the productivity, maybe Rolando or Pramila. I don't know if you have any remarks or thoughts to share.
On the productivity side, I can share my own perspective or views first. If not the productivity itself, in our report, if you have a look at, we have included one analysis to test whether there is any past relationship between the digital services exports and the per capita GNI or per capita GDP growth, in a sense, because at the end of the day, the income and the GDP should be supported by the productivity growth. So in that sense, I tend to think that they can be a proxy for the productivity growth. So according to our analysis, utilizing the Frankel-Romer model in AER 1999, based on the two-stage least squares methodology, we can show that there is a quite significant positive causality from the digital services exports onto the per capita income or per capita GDP growth across the world as well as across the region. So I would like to take that as quite evidence that digital services trade can contribute to the country's economic growth and income growth. Thank you.
If I can add maybe on that point, I understand that the productivity measurement of services is quite an issue, especially for you as I mean, in your division, and it is still, I mean, not being properly captured. So I don't know if in OECD there is a bit more progress, let's say, in terms of how to include this productivity growth in some sectors, services sectors where it's clearly not being captured by the standard approaches. I was wondering if maybe you or Annabelle had any thoughts on that.
Maybe I can, this is a very difficult question. Maybe I can start and then give the floor to Annabelle, but in terms of measurement, it's true that there is this kind of conception that there is some sort of mismeasurement because despite the digitalization, the growth, in all these digital sectors, we don't see productivity gains. So there are, it's either we are missing something in measurement, or this digitalization is not contributing to productivity. Of course, the first one is considered as a more likely, let's say, explanation, so a mismeasurement problem. I mean, what I can say, I mean, very briefly, is that yes, there is some part of, I mean, some transactions, some of the non-monetary transactions, some of all the data exchanges, and some of the gains in efficiency and gains in yes, basically efficiency gains that are given by data, and the usage of data are. It's true that they are not actually captured in current statistics. So, but I mean, what I can tell you is that there, I mean, in the provision of the standards of the system of national accounts and balance of payments, I mean, there are discussions on this, and so there are many things that are captured and are measured, and some where we are working on. So, I mean, that would be, my first reaction, and Annabelle is most welcome to complement.
Thank you, Antonella. In fact, I have much to say compared to what you just said. You're right, Rolando. I mean, we cannot measure productivity in the service sector very well. At the same time, the economic literature seems to show that measurement is not really what is driving the slowdown in productivity. There are many other factors. So it's true, we have always got to improve the measurement, but it's also very difficult, as Antonella said. There has been some attempt in a few countries, like the UK. They try to measure in particular productivity in the public sector. And it's really okay. It's perhaps a little bit of progress, but still we are not quite there. So it's at the moment we are far from having a perfect measure, but at the same time, I'm not sure it will resolve the productivity puzzle. Just if I may, I have the floor on the question on the impact of digitalization on productivity. Some colleagues in the OECD have done a lot of work on these issues, and what they show in particular is two things. First, digitalization is a very vague term, and you have to make a difference between the type of technologies you're looking at. And the impact on productivity is not the same whether you look at first generation digitalization technologies or new technologies. And the second results they found is that complementarity is very important. Complementarities between the different types of technologies, but also to complementarities with other inputs like human capitals or infrastructure. Basically, if you introduce a new technology in a firm, but you don't have the human capital, either at the management or at the worker level to benefit from this digitalization, nothing is going to happen on productivity. So these are points that we do have some evidence on looking at what happened in OECD countries. And very briefly on the question on tax and FDI, yes, for sure, Ireland is likely to suffer a little bit from the new changes in tax. But at the same time, there are also evidence that tax is not the main factor driving attractiveness of FDI. You do have other factors such as infrastructure and human capital. It's always the same culprit, but tax is not the end of the story there. Thank you.
Thank you.
Thank you very much. And actually, on this topic, I mean, on the topic of tax, I mean, there is an extensive section in the report. So I don't know if anyone wants to just briefly touch and summarize some of the findings regarding this topic. Or we can, I mean, depending on the time, I mean, we can just refer the person.
Sure.
To
I can maybe just mention, I mean, as you mentioned, the report contains some of the recent developments in the process that is led by OECD and on the two-pillar global solution. I think on this question of FDI, there is a question on tax incentives that I understand is being discussed within the OECD in terms of the carve-outs or exceptions that sometimes countries can apply in case they have certain tax incentives, and they will to some extent affect the pillar 2 of the global corporate minimum tax. But yeah, I think that's something that is more like under discussion, but it's probably affect not only Ireland, other countries, but is currently part of the negotiations. I understand that is still in development regarding the implementation of Pillar 2. Yeah, thanks.
Thank you, Rolando. I know we are late, but maybe we can take this last question, which is for Janos, from Professor Jane Drake-Brockman. So if we are interested in Mode 1 digital services trade, and the STRI is telling us about that globally, while there is a big backlog of restrictions built up over recent years, the DSTRI has declined slightly as part of the pandemic response. But restrictiveness in computer services as measured by the STRI shows persistent increase, not so much in Mode 1, but very much so in Mode 3 and Mode 4. So can you explain the interlinkages? And also, do we need to monitor those two STRIs together?
Thank you, Antonella, and thank you for the question. That's a very, very important point, and I try to reply very briefly, but essentially the digital STRI is a tool to measure horizontal barriers that affect all kinds of digital activities and all kinds of digital services, but it's by no means the only tool that we should be looking at. So the other STRI sectors that we cover, and notably computer services, but also telecommunication services, distribution services, they all play a very important role in how the digital economy works. So also all the sectoral regulations and all the sectoral barriers that are specific in those specific sectors play a very important role in how easy it is for digital activities to take place. So it is very important to understand when we look at computer services, what are the Mode 3 or the barriers that relate to foreign investment, or also barriers related to Mode 4, those are related to the movement of people, in order to understand also what are the other conditions that affect, for instance, the investment in digital services abroad, or for instance, how easy it is for computer professionals to move to their clients abroad. The same is with telecommunications sectors, and the same is with the other sectors. What we do at the OECD is usually to take the digital STRI as the cross-cutting indicator that provides us with a snapshot of the situation that affects all services, but then also complement that with specific insights into these other measures that would enrich a bit the analysis depending on the specific focus of the research. So just to say that I fully agree that it's something that we should also monitor, and if there is any interest, all the information on these other sectors are available online.
Thank you very much, Janos. Thank you very much to all the speakers, to all the participants. I think it's time to close the meeting. We are only 10 minutes late, but the discussion was really enriching and interesting. So, I mean, if there are any speakers that want to give some final thoughts or final remarks, you can just wave. Otherwise, I mean, if not, I think it's time to close. So thank you, everyone, and goodbye.
Thank you.
Thank you.